Let's do the US 30 backtesting for the PDH PDL liquidation model at New York Stock Exchange Open, which is the NYSE Open 9:30 a.m. So what we need to do is we need to click on this go to, click on custom settings, make the start of New York session, if it shows New York time here, to 9:30 a.m. which is our New York time. And then when you go to the custom session indicator here, you can put in 8 p.m. to 1 a.m. New York, which is UTC minus 4 as Asia, 2 a.m. to 5 a.m. New York, which is London session, and you need to go to the session indicator by FX replay, close everything, make them white. You don't need any of these sessions from here because this is needed for the PDH and PDL indicator. Here, as you see, I've configured all the sessions as 00 because we've already configured in the custom session indicator. So once we are set, what we need to do is we need to move to M10 time frame, which is the 10-minute, and sometimes we'll use 15 minutes. I'll talk about that, but our main time frame is 10 minutes. Now at NYSE Open, if we click on go to next New York session, go to next New York session here. So what do we see? We see that the PDH has already been liquidated. So this is a phase 2, which is New York Stock Exchange opens above the PDL when its PDL is already liquidated. So we have this Asian session and we have this London range, and we have these swings which could be potential manipulation points. Once taken out, we need to wait for a bearish M10 candle which has swept the previous candle's high for a sell stop order. So let's just play price and see how it behaves at NYSE. So we got a huge bearish candle. The reason why that I would not take this trade is because if I have to place a sell stop order, this meets all the criteria. It's phase 2, it has done its manipulation, but if you look at the stop loss is 0.91%. So if I drag a 2.5 hour below like this, 2.5 hour, which it requires an index to fall by 2.27% for us to get the take profit, I wouldn't take this trade. So I just skip this day or wait for another manipulation on the upside if it happens, which it evidently did not, and price then chops around. So we do not take trades which have more than 1% requirement for an index to fall for our 2.5 hour take profit. So we just move to the next New York session. Asian session was ranging, London session was ranging, NYSE opens in between PDH and PDL. So we'll wait for either side of PDH or PDL to get liquidated. So let's see which gets taken out within the session. Okay, so nothing gets taken out within our 2.5 hour session, which is 9:30 a.m. to 12 p.m. So after that, we do not take trade. In a scenario where we are in a trade, we just go break even after 12 p.m. because think about it, the idea is to play an expansion, and if an expansion doesn't happen and during the NYPM hours, the second half of the stock exchange, if price starts coming back, then most likely it's not going towards your desired direction. So we just get out at break even. Now let's go and look at the next New York session. So this is interesting because we have the Asian session range, London session range, both got liquidated, and just pre NYSE open the PDH got liquidated at 9:20 a.m. So here this is again a phase 2 because New York Stock Exchange opens with a PDL liquidation. So we wait for a sweep of these lows and then a bullish hammer candle which has swept previous candles low and close bullish. So let's see if that happens. Okay, this gets liquidated, but we don't have our desired candle that we want to trade off. We play the next candle, then we see this happens, right? But here we don't have any setup because this candle ideally should have swept this candle's low and closed higher. If we look at M15, we get the same thing. It's relatively equal low, so we are never trading from this. So we'll just pass this and play price. It came down again, and if you see, there is no, this M10 candle swept previous candle's low, but it did not close above, so we won't consider this as a valid sweep candle. So we just keep playing price and then nothing happened. So we again move to the next New York session. Now here it's again interesting, it's again a phase 2 trade because New York Stock Exchange opens with previous day high already liquidated. So which is our liquidity level to take out first? It is this high, right? We would want this high to get liquidated, or we would want a move down and then a manipulative move which takes out some of the swing highs, and then again a bearish candle here, and then we take a short entry in continuation. It's exactly like the market structure shift model on liquidity hunt that we follow for EU and GU. So let's play price and see. Okay, price liquidated previous candles high here. Let's see if this was a desired stop loss that we would want to take. How much was that? It was a 0.68%, so we won't take this trade because this again requires an index to fall by more than 1%, almost 2%, 1.7%. So we just pass on this and let the trade play out. Okay, good that it came back once again up to the upside. So now it has cleared again the liquidity at the stock exchange open, and we are at 10:40 a.m. We only take trades up to 12 p.m. Now let's play price further. Okay, we got a candle that has swept previous candles high and it has closed below it. So this is a valid candle which we can take a trade. However, I am not so impressed because of its tiny nature against a bullish momentum. So what I would do is I would wait for an M15 to end up forming. So M15 had a bullish shift again. So here we are probably getting another candle which has swept previous candles high and closed lower. So here I would take a sell stop order. The reason why I did not do this because this was not a proper reversal, but if you look at this M10 candle, it has swept previous candles high and has closed way lower with most of its body towards the bottom half. So this is how we all know what is a bearish hammer, right? We've all started with this. So then we take a 2.5 hour entry. So does it check all the boxes? Yes. NYC opens with PDH liquidated, then we got a manipulative swing, and now we are getting a proxy of a market structure shift, which is a bearish M10 initiation where our stop loss is relatively lower. We just need the index to retrace by 0.34% to give our TP, and this is how we'll place the sell stop order. While placing the sell stop order, don't just put at the wick, put with some buffer so that it just doesn't tag you and go. So let's play price and see what happens. Okay, we had one stop loss. So now we are allowed two stop losses in a particular day. But however, if you see, unfortunately, this has cleared the 12 p.m. window. So we'll just skip. So it was a lost day. Then we move to the next day where we see that New York Stock Exchange opens with PDH liquidated. Now here, if PDH is liquidated, then we want to see a liquidation of this high and then a bearish shift. So let's play price. We got a previous candles high liquidated and we got a bearish initiation. So here we place the sell stop order slightly below, just cover the high a bit by a little bit, and then we take a 2.5 hour desired take profit, which requires the index to fall by 1%, which is still fine, but it is recommended that you do not go beyond like 1% and expect index to fall down by 2%, etc. So we place a sell stop order here. Okay, so it did not tag us, and then what happened is it swept other high and then it gave a fresh initiation on M10. So here if we place a sell stop order slightly below here, cover the high a little bit and see with 2.5 hour are we getting a desired take profit range. Yes, it just needs the index to fall by 0.68%. So here we'll take the trade. Let's do the checklist. New York Stock Exchange opens with PDH liquidated. There's a manipulative swing, and then we found a bearish candle which has swept the previous candle's high and closed lower. This is a proxy for a market structure shift, and then we put a sell stop order and then we play price. Okay, it again did not sweep this candle, so we just wait for a fresh initiation to occur. Now this candle, if you see, it's quite interesting. It has crossed previous candle's high, it has closed lower. So here we could potentially put another sell stop order. cover this high and wait for a 2.5 hour. So this was a winner. Now what did we learn from this? That there was this candle that we ignored because the desired TP was more than 1%. There was this initiation which never got triggered as price just retraced back. Then we got this initiation where we took a sell stop order, covered the high a bit, and then it resulted in a take profit. So here what we are essentially doing is hunting for external range liquidity, waiting for external range liquidity to get hunted, and then we wait for a hunt towards internal range liquidity. It liquidated here. We are well within our time frame. When we got the entry, it was around 11:10 a.m. and it gave us our TP during the lunch hour, which is fine. Now let's go and look at the next New York session. So this New York session again opens with PDL already liquidated. So now we are looking for longs. Asian session, London session. This is the NYAM Forex session which had a retracement. So now what we want is we want a liquidation of some sort of a low here and then a bullish shift on M10 to take a long entry. It moved upwards. Let's see, we got a swing manipulation. So the the New York AM lows are getting liquidated. We still don't have a sweep candle that closed below the within the range of the previous M10 candle, so we just keep playing price. We now got a candle which swept previous candles low and closed within the range. So this is a valid candle. However, I would have loved if this would have closed much bullish, but since this is a valid setup, let's just take the trade even if it's a loss or profit, because this is a probabilistic model. We cover the lows a bit and then we wait for a 2.5 hour to see how much is it requiring us to get to this 2.5, which is a 0.74%. This is a valid um, order in my experience. So now let's see if price actually expands up or not. Now if you see, we are at 11:50 a.m. After this initiation, I would have expected price to go up. However, what ended up happening is price is chopping around. So what I will do is right after the session ends, right, we move our stop loss to break even, because if a PDL reversal had to happen and there was the strong initiation already, I would have expected an expansion to take place, right? If an expansion is not taking place, then there is no point in hoping in here. So we just move to break even and play price and see if it just tags it out. After that, we don't care even if it goes to TP or SL, because more often than not it won't, and here the market actually closes. Now let's go, and this trade actually ended up being almost a take profit, but this would just develop a bad habit for us to keep hoping, because we want a straight 2.5 hour very quick in and out. Now let's go and look at the next New York session. This New York session, the New York Stock Exchange open, NYSE open at 9:30, opens above the PDH. So this is a great scenario because every other range liquidity has been taken out. So we got a bearish initiation which swept previous candles high and closed in a bearish way. So we place a sell stop order below this and cover the high slightly, and then we see how much does it require for the index to fall to give us a 2.5 hour. It requires 0.44%. So this is a favorable scenario. Let's put the sell stop order. Okay, we got a better candle. Now we close this order. Why this is a better candle? Because this swept previous candles high, and now this is a proper hammer on the bearish side which has swept previous candles high and closed lower. So this is a very high probable setup from my experience. So we'll place a sell stop order above this, and then we'll do a 2.5 hour to see how much does it require for the index to fall to give us a TP, which is 0.58%. So it checks all the boxes: Asian session range, London session range, NYSE opens, liquidates everything around it. So now the only thing is all of these SSLQs below these internal range liquidities, which can probably be hunted in this session. So that's the trade idea. So we place a sell stop order here. Okay, we placed a sell stop order, so now our expectation is for price to go down, and we are at the early hours of NYSE, so which is also favorable. We get tagged in. Now we are at lunch hour already and price is not moving, so either you just move your stops to break even, so the moment you get tagged in at BE, you just get out, because our expectation was for it to go down. So what we'll do is we'll just manually close the position so that we move on to the next session. Then we go to the next New York session. One thing which I forgot to inform is, in a scenario where PDH and PDL both get liquidated at NYSE Open, we do nothing, because then imagine a daily candle which has swept previous candles low and already has now swept previous candles high. That means in a lower time frame there are bullish swing breakoff structures that are happening, right? So it's pointless to short against that. So now here NYSE opens, there was news at around 8:30 a.m. The good part about this strategy is by the time we get to work, all the red folder news, most of them are already over, so we get a clear view on price. So New York Stock Exchange opens with PDH already liquidated. There's an Asian session range, there's a London session range. There is this liquidity that if this gets taken out with a bearish initiation, we could probably see a short entry model. We couldn't see this entry, but we saw liquidation of these swing highs on M10, right? So this is good enough for us to take a potential short entry, but we'll have to see how much it requires for us to get to the TP. If I just cover this high, let's say I cover these highs and take a 2.5 hour. 2.5 hour, it needs a 1.37%. It's ambitious. I wouldn't take this trade. We'll just play price. Okay, we are already in the lunch hour, so we then go to this. In a particular month, you'll see me skipping a lot of days, because in a particular month the ideal trades you will get is 7 to 8, or at max, if you are very lucky, we get 10 trades, but those have a good 5 to 6% monthly win rate. Then we go to the New York session. Again, we are in between PDH and PDL, hoping for PDL liquidation to happen. Let's see what happens. Okay, it goes up to the PDH and then the session gets over, so we do nothing, we again skip. Here we open, NYSE opens with PDH already liquidated. We have this London highs that are already taken out, so I would expect price to either take out Asia highs or some of the swing highs in between and give us an initiation. So let's play price. We did not get an initiation because this is a plain sweep. If we look at M15, yes. So this is an interesting scenario, because on M10, if you see, it took out London lows at London highs at NYSE Open. These were the New York AM Forex session highs. Those were also taken out, but we did not get this candle which swept previous candles high and closed bearish, right? And it could also start falling down. So our idea is to get tagged in the move, because we understand the context as to why we are doing this. So in this scenario, if we switch at M15, you would see that in M15 candle had a nice sweep of previous candle low and it closed bearish. So this is where you would potentially take a M15 short entry, put the stop loss above it and target for 2.5 hour. And here, since we already, like while explaining to you guys, I skipped this, so I'm just putting a limit order just in case it tags me, and then we'll see what happens. Okay, now we are already at the end of the session, so we just move to B to see what happens. Okay, anyways, this is not a TP. I will just close this because we are already out of our session, and then this is the next day's Asia session, so this is irrelevant for us. Now we go to next New York session. So we move to B at 12 p.m. New York, and in a scenario by the end of 4 p.m, if we are in a profit and it has not reached our TP, we just close, because of two reasons. A, the new day starts which has new PDH and PDL, so our setup gets invalid, and second, we don't want to pay swaps for a setup of yesterday, right? Because indices have huge swaps on the, at least on the CFD part, people who are trading CFD, they'll end up paying huge swaps on indices. Now let's go to the new day, which is of 17th January, where we see PDL already liquidated. So this is again a phase 2. Here now we have to wait for some sort of manipulation to take place and then a bullish candle for us to take an entry. Let's go to 10 minutes, which is our main time frame. Let's play price. Okay, we got a huge candle on the initiation. It has taken out all the liquidity. Then we got a bullish candle, price never moved above it. So obviously if we would have placed a buy stop order above this, we could have cancelled it by now. So let's keep playing price. Now we got a huge bullish candle like this, right? So this is where we need to go and look what's happening on M15. Even on M15 there is no reversal which we would want to see, and on M10 there is no reversal, so we'll just stay put and observe what price is doing. It again came back, right? So never get into a FOMO and try to catch these, because a reversal is always a sweep of previous candle and a bullish close. That is the proxy of a market structure shift. Okay, we keep playing price. Now we got a candle. So this is the kind of candle I really like to see. It has swept previous candles low and it has closed bullish. We are still at 11:20, so we have enough time for the move to happen and protect ourselves from a break even standpoint. So I'll just put the stop order slightly above with a stop loss slightly below, and then target a 2.5 hour, because now it checks all the boxes. PDL was already liquidated, it had a manipulative move, and now it is a potential shift in structure using an M10. So we place a buy stop order and then we move up. So now we are at the end of the session, right? We are already end of the session. We are in drawdown. We wait for obviously for price to move in our favor, because we don't want to close it in a drawdown. So now what you do is you move to BE strictly by rules. If it has to take you out on BE, let it take it out, because what we expect after this is a straight reversal. Okay, we are out on BE, and see ultimately it went to stop loss. So there's no point in hoping here. It has to be like a straightforward reversal. Then we go to the next New York session, which is 18th of Jan, where price has already liquidated the PDL. So here what do we see? We want to see a manipulation of London lows at the least, and then a bullish reversal. So let's play price and see how it behaves. NYC opens exactly as expected. It again retests the PDL, it manipulates London low, and it also takes out the Asian lows. So then we wait for a bullish reversal in price to happen. Whenever you see these kind of a bullish momentum, always wait for a M15. That would be my personal advice, because this is a strong bearish momentum, right? And M10 would also give you certain entries, but if you go to M15, it will just give you more confidence that now your price is about to react. So that's why whenever you see like move like this, we always move to M15, because that becomes a savior a lot of times, because we are trading against such a bearish order flow. We place the buy stop order slightly above, but wait, we need to look at the time. We are at 11:45. So now this is risky, right? Because we are already at 11:45 and we are trading M15. And what are we hoping? That in the next 15 minutes one M15 candle gets formed like this, also allows us enough room to take break even, which is unrealistic in our expectation. And if you look at M10, then we have this nice candle which has been formed, and um, we have like 10 minutes to go, right? So I wouldn't take this trade, and let's just see how it plays out. It anyways, it didn't play out. The reason is simple, right? Because we want to get tagged in the first few minutes of the session, or at least in the hour of 10 to 11 a.m. at max, right? After 11 a.m. the probability starts getting decreased. Now we go to the next New York session. Next New York session opens below the previous day low. It has liquidated all the Asian lows and highs. It only has these NYAM, which is 7 to 10 a.m. New York lows currently here, which we would want to get manipulated before we look for a long entry. Okay, nothing happened as usual. It just chopped around, so we move to the next New York session. In the next New York session, what do we see? We are in between PDH and PDL. Price has ranged around bit. So these are high probability scenarios where the external range liquidities can play a huge role, because there's engineered internal range liquidity all around with these sideways range. So let's play price to see what happens. Okay, price opens at NYC open, it liquidates the previous day low. Now when you start seeing this scenario where there's no sweep candle, you also may want to look at M15 to see how it's developing. Okay, M15 is also not developing well in this scenario, so we go back to M10, we keep playing price. Price just moved without us and it's totally fine. We again move to next New York session. We are opening above with previous day high already liquidated. The only the manipulation levels that we want to see are here, which is this high. So let's play price and see what happens. It liquidated this high, it is going up. Now we got a nice candle which swept previous candles high and closed bearish. So these are the candles that I really prefer trading. We put a sell stop order slightly below so that we ensure we are getting tagged in the expansion. We cover the high slightly, we wait for 2.5 hour, which is a 0.53% expectation, which is fair enough for an instrument like US30. We place a sell stop order and then we start playing price. Okay, the next candle just destroys our hypothesis and keeps going up. So now this is a bullish momentum. Now in this bullish momentum you want to wait for an M15. You don't want to risk with a smaller time frame. And also look at the time, we are at 11, so we have good enough time. Now we got a nice M15 candle which swept previous candles high and closed lower. We are at 11:15, so we have still 45 minutes for our trade to play out and allow us a room for break even. So what we do is we put a sell stop order slightly below, cover the high, and first check if 2.5 hour demands a 0.8% decline, right, which is still doable. So let's put a sell stop order here on M15. The reason why I moved to M15 is because of this strong bullish momentum. Okay, we are at this, we obviously were in drawdown, so we wait for us to get back to BE and then we move to break even and let's see what price does. Okay, so here the session closes. When session closes, you just need to close the trade because you don't want to pay for swaps, neither you don't want to, because the new PDH and PDL get formed. Then we move to the next New York session, previous day low and previous day high. We move to M10 and we see what New York Stock Exchange does. It just chopped around in between, so we do nothing. Then we move to New York session again. This is previous day low and previous day high. We got a nice bullish candle that swept previous M10 candle high and closed most of its part on the upper side of the body. So this is something which we can potentially take, and still the bearish momentum is not so high, so we can expect a reversal after such a huge event, which is an external range liquidities liquidation, which is the previous day low. 2.5 hour, which was a 0.79% increase, which is doable in US30. So do a buy stop order. Let's see what price does. We are now out of session, so here again what we do is we move our stop loss to break even because we don't want to waste time. So this was a winner. So here it was a very simple setup because NYC open ran into liquidity. It gave a bullish initiation on M10 and then we saw a bullish shift. Now let's go to the next New York session. We are coming towards the end of the month. We have 3-4 days left, so let's see if the results are as per our expectations or not. Again, what we see here is NYC opens with PDH already liquidated, so this is the line that I want to be taken out, and then a bearish initiation so that we can take a short entry. This is a strong bearish initiation. Now the only concern that I would have with this is it would require the index to fall down by how much? By 1.3%. I'm not taking this because this is unrealistic for an index to be so volatile in one particular day. So I would want for some other manipulation to happen, but unfortunately the session gets over, so we move to the next trade. So see, this is the thing, right, that it comes back when the requirement is so high. You can't expect reversal, because we are not trading market structure here, we are trading an internal range liquidation. Then we go to the next New York session on M10. We are on 27th January. We have an Asian range, we have a London range. PDH is already liquidated, so we are again in phase 2. Now we want what we want to see is that NYSE open takes out this buy side liquidity level and then creates a bearish initiation on M10. So let's see what happens. Exactly does that, but we don't have any tradable candle yet. Yes, this is arguably a sweep candle which has swept previous days previous candles high and closed bearish, but however this is not a proper bearish hammer candle, right? So I won't take it. But what I would love to do is I would love to open an M15 chart here in parallel to see if we are building something interesting on M15, but we are not. It's a bullish initiation, so let's just play price. Had we taken this trade, it would have been a straight SL, right? Because even with our entry buffer, it would have tagged us in. But you need to understand how an M10 candle should look like. It should be a proper bearish candle. So now let's play price once again. Here we are not getting anything on M10 and we are not getting anything on M15 as well. So we just play price once again. And it just collapsed without us, and it again came back within the same session. So nothing to do here. We skip 27th, we move to 28th of January. I'll switch back to M10. We open with a PDL liquidation, right? And Asia highs are liquidated, but what we want to see is a liquidation on the opposite side and then a shift. So let's see how this behaves. It had a strong bullish move and nothing happened. So we just, my expectation was to take out this sell side liquidity at open and then move up, but ultimately the move up without liquidation of orders also didn't work out, which is a nice learning, but anyways we couldn't enter anyway. So we then move to the next New York session. Next New York session we again open with a previous day low, and you see we want these lows to taken out, we want these lows to be taken out so that we can get some sort of a shift in structure. So let's see what happens. There is no low be taken out and there is a bullish initiation, we won't be taking it. Price keeps chopping around and then we end this session as well. Then we go to the next New York session. We are on 1st Feb, so we are done with the backtesting for US30 for January. Let's go and look at the results, how they look like on US30. Just this one. We look at the analytics. So it's a 6% return per month with a 66% win rate, and we had taken 8 trades. Out of them 4 were winners and 2 were break even. So yeah, this is how it looks like. We had 4 winners, 2 losers. Average hour was 1.92, we targeted 2.5. And then if you see the hours of UTC -4, New York, the main hours are obviously 9, 10 and 11. We don't take any trades after that. This was the return, which is 6% per month, which we expect. So yeah, that's it. Thank you guys.